Hello and welcome to another video. Today we'll be looking at how you can trade BTC USD with Grail Hedge Strategy. Okay, I have BTC USD chart on my screen. Okay, and the time frame is 15 minutes time frame. All right, so the essence of this video is to show you how you can use the Grail Hedge strategy to trade Bitcoin versus dollar. Okay, and now price is going up, and what I did was to place a buy trade around here. Okay, I place my buy trade around here. Okay, so for this strategy, whenever you are buying, you set your take profit, okay, to be 250 points. Okay, so my take profit is around here. My take profit is around here, 250 points. All right, but there are times you place your buy trade and price starts to retrace. Okay, you place a buy trade, and instead of Bitcoin versus dollar price to go up and hit your take profits, it starts to retrace. So the Grail Hedge strategy involves you placing a hedge trade. Hedge trade is an opposite trade. Okay, you are buying, for instance, your hedge trade will be a sell order. Okay, or if you are selling, your hedge trade will be a buy order. Now the hedge trade, now I've placed a buy trade of 0.01 around here. I expect price to hit the take profit above, which is 250 points, okay, above this line. But if price retraces up to 380 points, then it will trip or trigger my sell stop order. Now my sell stop order is around here. Okay, I'm expecting price to go up, but if it reverses and triggers my sell stop order, I'll have two running trades. Okay, the first trade is my buy trade, the second trade will be my sell trade. Now the buy trade is 0.01, so my hedge trade, which is a sell trade, will be 0.03, which is times 3 of the initial trade entry. Okay, if I'm using 0.02 as my initial trade entry, my hedge trade will be 0.02 times 3, that's 0.06. All right, if I'm using 0.03 as my first entry or first trade, the edge trade, corresponding edge trade will be 0.09, which is 3 times 0.03. So that's how it goes. Now for every 0.01 first entry or first trade like I have here, my account balance must be at least $300 for a standard account. Okay, so the essence of having that amount is so that your account can withstand the price range of fluctuation. Okay, as price is about this point, I expect price to go up, but if it turns down, and then goes up, that's a range. That means I'm in a range. Okay, where a range is a situation where price is neither going up nor going down, but just moving up and down within a small, within a small space. Okay, so the essence of these strategies, if you enter a trade, if it is a buy trade, and you price starts to range, it will range and put your account in a drawdown. But the strategy, in line with the strategy, you expect to pick the second trade, and if price goes against your initial trade, the second trade, the lot size is 3 times the first trade, so you're expected to recover, okay, your account, you recover your loss, and then break even. Break even is a point where both trades gets to the other side, which is around here, and then you neither have a loss or you neither have a profit. But for the Grail Hedge strategy, if you are able to break even, your trade will close in a small profit. Okay, your trade will close in a small profit, because the calculation has been done to accommodate a little allowance for small profits at the end of the day. Okay, now the first trade is 0.01. The take profit is 2. You had 250 points. If your price for the first trade is 33,870, for instance, you have 250 points to that. Let's say your first trade is 33,848. Adding 250 points to that will give you 34,098. Okay, that's just an example. Now 34,848, if you subtract if your entry, okay, let me make an example. If your trade entry is at 34,000 or 33,848. Okay, let's assume this black line, this is my black line. Let me increase the width or the pixel. Okay, let's assume where the black line is your trade entry. Okay, your take profit will be 250 points for the first trade. Take profit will be 250 points added to that, which is 34,000. Okay, that will be around 34,098. So this black line above here, this black line here, is your take profit for the first trade. Okay, now your edge trade, because immediately you place your buy trade or you place your sell trade, you must place the edge trade immediately in line with this strategy. So for this buy trade at 33,848, your edge trade will be 380 points below. Okay, so you'll be placing your edge trade for the buy trade, which will be a sell trade somewhere around here. That will be 33,468. If you subtract 380 points from this first trade that I'm highlighting, if you remove 380 points from 33848, you have 33468. So you'll be putting 33468 around here. 33468. 468. Okay, so that's where your edge trade will be. Now the take profit for your edge trade, don't forget the edge trade is 3 times the initial lot size. Okay, now the take profit for your edge trade will also be corresponding 250 points below. So removing 250 points from this edge trade, 33468, if you remove 250 points from there, you have 33198. So you're gonna set your take profit at 33198. Okay, so that's your the take profit for your edge trade. All right, so the take profit for the edge trade, let's change the color for the line to be green. Okay, and also let's take the take profit, let's change the color of the line to also be green. Okay, so the take profit lines are green. The first entry or first trade is black line, The edge trade is, let's change this color to blue. The edge trade is a blue color. Okay, that's your edge trade. The two take profits are green in color. Okay, now you have take profit on either side of your trades. What about stop loss? Now stop loss will be 40 points above each trade. Now for stop loss for your first trade, which is your buy trade, let's change the color to red. Okay, so that will be 40 for stop loss for your first trade. I'm highlighting the first trade here, so that will be 40 points below the take profit. Okay, if your take profit 40 points below the take profit of your edge trade, I'm highlighting the edge trade. Your edge trade is around 33198, so subtract 40 points, that will be 331. If you remove 40 points from 33198, you'll be having 33138 or thereabouts, or 33158. You're having 33158. Okay, so the take profit for this take profit I'm highlighting is for this black line, which is your first trade entry. So it'll be 33158. So just highlight it, change the 158. Okay, so that's the stop loss. This red line I highlighted is a stop loss for your first trade. What you just did is you consider the take profit of your edge trade and then you remove 40 points from it. Okay, and that gives you the red line. So you place your stop loss for the first entry below the green, the take profit of the edge trade. Same thing applies to stop loss for your edge trade. Your edge trade must also have stop loss to be above the take profit of your first trade. Okay, and that will be 40 points above that level. I'm talking about the stop loss for this blue line, which is your edge trade. You know, in case it gets triggered and the price continues up, okay, and eventually passes this level and goes up to this level, you must have a stop loss for this order, this blue lined sell stop order. Okay, now that will also be 40 points above, and 40 points above will be 33. Of course, your take profit of your first trade is 34098. So adding 40 to that, 34138. So the stop loss will be 34138. Okay, so that's that. So you have successfully placed your first trade, which is a buy trade. Okay, maybe you place your first trade, which is a buy trade. The take profit will be 250 points. Then the stop loss will be below 40 points below the take profit of your edge trade. Then you can now go ahead and place your edge trade. Just a minute. Your edge trade, which will be 380 points below. Don't forget, your edge trade will be 380 points below. You measure 380 points downwards below the original trade. Okay, measure 380 points below the original trade. Then you can now measure 250 points for the edge trade as well. Measure 250 points for your edge trade. All right, so that means you have take profit for your first trade, your running order, and you have take profit for your pending order. Of course, the zone recovery, this is your zone recovery, is 380 points. It's very important. All right, so in as much as you have that, then you measure stop loss. Stop loss will just be 40 points above and below the two take profits. Stop loss will be 40 points above and below the two take profits. Okay, 40 points above and below their corresponding stop losses. Okay, with 40 points above and below the two take profits. So now you have your first trade. Okay, you have your first trade, which is this black line. Okay, like I have it for this example, for this current example on the screen, it's running. Okay, and it appears as if the sellers are trying to push price down. If they push it down and it triggers my sell trade, my sell order, pending order, it also becomes an active trade and start to run. If you now go back up, okay, and gets to this point, I'll be in a big loss, which I don't want to be in. So in line with Grail Hedge strategy, I have my running trade, first trade, I have my pending order. As long as my pending order is still pending, I hold. Okay, if my first trade goes into profit, okay, if it goes into profit and I close the trade, I'll delete this pending order. But if it does not go into profit, rather price retraces down to trigger my edge trade, I will immediately place another pending order about this point. That pending order, the lot size will now be 0.08. Reason that 0.08, if I place 0.08, I initially have 0.01, which is my first trade, and I've placed a buy stop order here. Okay, I'll place a buy stop order here as a pending order since this sell stop has been triggered. Okay, in as much as this sell stop has been triggered and it's now a running sell trade, I have to make another cover with another pending order, a buy stop order this time around. So don't forget, the pending order must be corresponding opposite of the latest triggered order. What am I saying? The first trade is a buy trade. The corresponding opposite of a buy trade is a sell trade. But instead of placing sell trade here, it's not going to be possible. But I can place, since price is above, I can place sell stop. Okay, on this blue line. Now, if price drops and triggers my sell stop, it becomes a sell order instantly. So I now go back to where I have this black line and place a buy stop since price will be below. Now the lot size of the buy stop will be 0.08. Reason is that 0.08 plus the existing 0.01, that's 0.09. 0.09 will balance our ratio, which is ratio 1 to 3. 3 times the opposing lot size. Remember, the opposing lot size is 0.03, which was initially a sell stop, which is now, if triggered, a running sell order. Okay, is 0.03, and 3 times 0.03 is 0.09. Remember, we have an initial 0.01, which is the first trade on this black line, plus the pending order 0.08. 0.08 plus 0.01, that is 0.09. Okay, so the reason you place the 0.08 pending order buy stop is because the sell stop has been triggered and it has been converted to a running sell trade, and you have 2 running trades, so you must always have a backup pending order, which is your 0.08. Now if your 0.08 now also gets triggered, that means you have 3 running trades. The first one is your 0.01 on this black line. The second triggered trade is your 0.03 on this blue line. The third triggered trade is your 0.08 on this black line. You must have the last and final pending order, which is 0.24 on the blue line. Okay, that is on a rare occasion where you get yourself trapped in a tight range. Okay, so this will be your final, the pending order you're going to place on this blue line, 0.24 is going to be your final, okay, pending order, which is going to be a sell stop. Of course, 0.24 plus 0.03, that's 0.27. And remember, you have 0.08 here. You have 0.08 plus 0.01. That's 0.09. Of course, 0.09 times 3, that's 0.27. Remember, you have initial 0.03 plus 0.24, that's 0.27, which balances 3 times what the total orders you have here. Okay, you may rarely get to 0.24 pending order. Okay, not until you have 3 running trades. Okay, but how can you not get to that level? How can you not get to a level where you start placing 3 or 4 trades or pending orders whatsoever on your trade? You can get, you may not be able to get to that level if you follow the strategy itself. If you look at the screen, let me remove all. Okay, let me remove what I have here so that we look at the indicators setting for this strategy. Okay, for the strategy, the trading strategy on the screen, we have 4 indicator windows. Okay, we have 4 indicator windows. The first indicator window, the first window is your main window. All right. The second window is indicator window 1. The third window is indicator window 2. And the fourth window is indicator window 3. Okay. Now, the way the strategy works is when the 2 moving averages, these 2 moving averages, the blue and the red moving average, and they cross down on the gray moving averages, you have a sell or sell trend development. That means you have a bearish trend. Okay, but when it crosses up, you have a bullish trend development. So in a bullish trend, you look for buy opportunities. Buy opportunities comes when price starts to form clear above the red line. The price must form, the price bar must form and must be clear, completely away from the red, above the red line. That gives you a buy signal. You can place your buy entry there. Then the sell signal, of course, must be a bearish trend. And the black bars, the black bearish bars must form below and away from the red line. In as much as it forms below and completely away, free from the red line, you can place your sell order. But when it retraces and touches the red line, you allow it to drop again, form completely the black. I'm talking about the black candles, which is a bearish candle, must form completely away from the red line, not touching the red moving average. So that's how to place buy and sell entries, or follows buy and sell signal. Now for indicator window 1, your buy signal is when the orange and red lines, when they drop below the lower envelope and then goes back above the lower envelope. All right, so that's your buy signal. Sell signal is when they go above, okay, like you have a go above the upper envelope around here, and then it now drops back below the upper envelope. That's your sell signal. Okay, for indicator window 2, buy signal will be when price, like you have around here, when price tests the lower levels. I'm talking about the 20 RSI level, 25 RSI level, and 30 RSI level. When price tests these levels and then goes back up to touch the 50 level, that's your buy signal. Okay, and sell signal is when price tests or goes above or goes into these upper levels, which is the 70, 75, 80 RSI level, and it goes to these upper levels and drops towards the 50 level. That's your sell signal. Okay. Then for your indicator window 3, where you have your ATR. Of course, ATR, when the ATR indicator, ATR line drops below, okay, and then curves above, curves upward, that's your buy signal. Then for sell signal, that's the inverse of the buy signal. When it gets to the top and start to curve downward, that's a sell signal. Of course, you can fine tune this by drawing trend lines. You can draw trend lines to know when the ATR line will cut the trend line. Like your trend line, okay, tapers around the ATR line in this manner. So when you have a cut, like a breakout of the line, like you have around here, that's your buy signal. Okay. Same thing for sell signal. Okay, where you can easily draw your trend line. So where you have a cut, where the ATR line cuts the trend line, like a break, okay, or change of direction on the trend line. That's a sell signal. Okay, so that's how to use the indicators on this screen. Now let's look at these parameters for the indicators. We have fractals. We have 30 period, moving average, exponential, applied to close, color is blue. We also have another 240 period, simple, applied to close, color is gray, moving average. We also have another 10 period, exponential, applied to close, color is red. And then we have 850 period, simple, applied to close, color is gray. So all these are on the main chart. For indicator, we know we have MACD. The fast EMA is 12, the slow EMA is 26, MACD SMA is 9, applied to close, no color. Then for the next indicator is average true range, period is 14, there is no color. And for the next indicator, we have moving average, 850 periods, method is simple, applied to previous indicators data, color is black. Okay, the next one is 3 period, shift is 0, linear weights, first indicator's data, color is red. Then the next one is envelopes, period is 350, shift is 0, deviation is 240.100, method is exponential, applied to previous indicators data. The upper band color is 40. The upper band color, the upper band color is blue, and the lower band color is red. Beg your pardon. Okay, the next one is moving average, period is 2, shift is 0, method is linear weight, applied to first indicators data, color is orange. Now for indicator window 2, we have RSI, relative strength index. The period is 10, applied to weighted close, color is blue. Let's look at the RSI levels. We have 80, 75, 70, 30, 25, 20, and then 50. Color is black. Now the last indicator is average true range. The period is 14, and the color is blue. So that's that for the parameters for the strategy. All right. That's that for the parameters for the strategy. Don't forget, the essence of this video is to explain the Grail Hedge strategy. And the Grail Hedge strategy is for you to, sorry, I want to remove this. Okay. The Grail Hedge strategy. Okay, it's for you to place your entry like you have, like I have here. I have a running trade, okay, buy trade, and I've placed a pending order 3 times that my buy trade. If price comes down to trigger my pending order, I have 2 trades. I have to quickly place another pending order 0.08. If price triggers that 0.08, goes up to trigger the 0.08, I have to place a final pending order 0.24. Okay, don't forget The first one will be, the first trade will be 0.01 for $300. The first edge will be 0.03. The second edge, which will be a buy stop, will be 0.08. The third and the final edge will be 0.4 for a $300. If you have a $600 account, you may go for 0.02 as your first trade, okay, which may be a buy trade. Of course, the edge will be a sell stop. Now 0.02 for your $600 account, the edge trade will be 0.02 times 3, which is 0.06. Of course, 2, 6. Then the next will be 0.16, which is 0.16. 0.16 plus 0.02, that's 0.18. Of course, that is 6 times 3, 0.1. 6 times 0.6. 6 times, sorry, 3 times 0.06 is 0.18. So you must always multiply the totality, the addition of all the pending orders or all the running trades, multiply it by 3 to get the summation or the total lot size you have as your opposing pending order or running trade, as the case may be. Okay, so that's that for the Grail Hedge strategy that you can use to trade BTC USD. For this example, I placed a buy trade and price still going up towards my TP, so it may not come down to hit my sell stop order, but if it comes down and fluctuates and triggers my sell stop order, I'm going to quickly place 0.08 as my next edge trade. Okay, but for now, price still going up towards my TP. It may hit my take profit, and I may not have any reason to have two running trades. If you are going to use the Grail Hedge strategy, make sure you have time to babysit the trade. Do not place trade for Grail Hedge strategy and then go away off your screen, because price may come to trigger your sell stop order and then go back to where it was coming from. And if you are not around to quickly place another pending order to hedge, you'll be in loss that you may not want to have. But in as much as you can have time and babysit, I mean sit to watch your screen every now and then to be sure your trade is running and is moving in line with what you have planned. If you don't have such time, do not start the Grail Hedge strategy. So it involves you placing the first trade, quickly placing the edge trade. If the edge trade gets triggered, probably you were wrong with your execution, and your edge trade gets triggered. Place another edge trade, which is 0.08. If that gets triggered, place the last edge trade, which will be 0.24. So that's that. You can click the subscribe button, subscribe to the channel, so that you get to see more of our videos on how to trade Forex Volatility Index, BTC USD. Click the like button, like the video. You can also click the bell button below the video for notification. Okay, you can drop your comments, make comments, ask questions. We try as much as possible to respond to your question. We have a website where you can learn how to trade Forex Volatility Index and also BTC. The website is www.btcusd.com. You can visit the website to learn more on how to trade. You can also visit another website of ours, which is fxfables.com. So that's that for this video. Till I come your way next time, it's bye for now.